Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel. In this quick video, I want to share an article that I just finished reading through talking about how war has affected the stock market in the past. As you all know, there's a lot of geopolitical tension in the air. Some of us, Russia, being a little sneaky, being a little unnecessarily aggressive and causing for a lot of geopolitical and global economic uncertainty. So it's important for us as investors to understand how events like this in the past have affected the markets so that we can use that knowledge to our advantage in the moment. All right, to do that, the article we're going to be reading through by Mr. Chris Morris of Fortune is titled, "The Nasdaq Nears a Bear Market, but Here's How Stocks Have Historically Been Affected by War." So I'm excited to read through this with you guys, but before we do, please give the video a like, subscribe to the channel, help your boy get to 50K. That would really mean a lot. Let me know in the comments down below how you feel about the markets. Are you feeling bullish or bearish following all of this geopolitical turmoil that's going on right now, some of the conflict that's happening in other parts of the world? Obviously, show some love in the comments down below for Ukraine. And personally, if you want to know how I am trading this through the volatility, you can check out my complete portfolio and daily newsletter, complete breakdown of my entire personal portfolio, which I do update every single trading day. With that update, you receive a newsletter right into your email inbox. And on top of that, you also receive my weekly exclusive videos. You get the private link to that through the newsletter. You can also join the exclusive Discord as well. Join the Waves, fam. Appreciate it if you guys do. That's $15 a month, $40 every 3 months. All those links are in the description box down below. So once again, it means a lot if you check them out. But if not, no worries at all. I appreciate you watching this video. Let's get to reading, okay? So Russia's attack on Ukraine early Thursday morning, saying global stocks reeling in the price of crude oil over the $100 mark. All major U.S. indexes plunged at the market's open, and the Nasdaq index, which has been volatile for some time now, floated with bear market territory. But obviously, as you guys know, we bounced back super hard. It'll be interesting to see how this next week plays out. Investor trepidation is natural in a time with this much uncertainty, but there can be some comfort in looking at how markets have handled other major geopolitical conflicts. Historically, the markets have shaken their fears in a relatively short period after a contraction at the start of hostilities. A study by AAPL Research found that between 1990 and 2020, the Dow Jones Industrial Average fell an average of 2% during 16 major events, including 9/11 and the Gulf War. And even going as far back as World War II, things weren't as bleak as they seemed for traders. A review of 20 major geopolitical events dating all the way back to World War II showed stocks had fully recovered losses with an average of 47 trading days within an average of 47 trading days after an average maximum drawdown of 5%, the study found. Russia's invasion of Ukraine is different than other recent events, of course. A superpower invading a neighbor in Europe and Vladimir Putin making aggressive comments such as, quote, "Anyone who tries to interfere with us must know that Russia's response will be immediate and will lead you to such consequences as you have never before experienced in your history." A bit different than the Iraq War. Keep in mind, you guys, at the moment, this is a little different, especially compared to the wars we're going to go over here and some of the metrics we'll go over. So just remember, this is a little different than the ones mentioned next because the U.S. at this moment in time, and hopefully we will not be, but we are currently not involved in, again, hopefully we do not get involved. At least that's not going to get political here. That's just my personal take. Optimistic guy, okay? So that said, here's how the markets have reacted to past conflicts. World War I, the Dow fell more than 30% and the markets were closed for 6 months. When they reopened, the Dow rose more than 88% in 1915. From the start of the war in 1914 until it ended in late 1918, the Dow gained over 43%, roughly 8.7% annually. WW2, the Dow increased 10% on the first day of trading after Hitler invaded Poland in 1939. When the attack on Pearl Harbor occurred, stocks fell 2.9%, but regained those losses in 1 month. From 1939 until the end of war in late 1945, the Dow saw an increase of 50%, more than 7% per year. Cuban Missile Crisis. While many feared events in 1962 would lead to World War III, investors were rather zen. During the 13-day confrontation, the Dow lost just 1.2% and gained 10% during the remainder of that year. 9/11. Stocks tumbled nearly 15% in a matter of days following the terrorist attacks, hampered by an ongoing recession and the dot-com collapse, but within months, the market had regained those losses. So I will say to you guys, this is not 9/11. Obviously, this is not as direct an impact by any means to the American economy, to just American, like the American citizens' general demeanor, because this is not on American soil. But because we're coming out of such an inflated bull market, like, again, you guys, so much liquidity was injected to the system by the Federal Reserve. You got helicopter money. You have retail flooding into the market with the stimmy checks, etc. You have the Federal Reserve, again, the central bank buying up bonds, buying stocks, buying assets, and just directly injecting liquidity into the market as well. So we are coming off of a very, very hyped market and a very, very inflated market in a sense. So that's important to remember as well. Although this is shining a generally positive light on what war, on the effect that war will have for the stock market. Just remember, you guys, there are a lot of other fundamentals at play. We've been talking a lot about them lately. So again, the Fed is probably going to step in, raise interest rates. We are coming off of, once again, very, very hot stock market and finally entering correction territory. And just general economic consumption, the numbers are objectively down based on a lot of retail earnings, a lot of earnings that have been happening, and outlooks are down from 2021 as well. So that's just important to remember, and some important caveats to this, once again, because this is shining a generally positive light on the effect that war has on the markets once again. So let's close it out. Iraq war stocks jumped 2.3% when the U.S. invaded Iraq in 2003. The markets were up 30% by the end of the year. So this also tells you that people love war. I guess the reason for this is, at least from, again, kind of a psychological perspective, is that war brings people together, right? The human beings are a very tribal species, right? And that's what countries are, is like your own tribe. Right now, we're more divided and polarized than ever within our own country, which also raises kind of red flags in the back of my mind when it comes to the fact that now, again, we're more polarized than ever. It's debatable as to whether or not war will actually create a patriotic environment like it has in these scenarios in the past. So that's something I'm worried about also. But again, you guys, people, I mean, the markets historically do like war. So we will see if, again, history never repeats itself, but it does rhyme. We'll see if it rhymes to a sense now. Obviously, on freaking Thursday and Friday after the big melt on Wednesday, the markets ripped back. So we will have to see if that was just some trigger-happy dip buyers or if that is the beginning of a reversal. You guys know I've leaned bearish over the past few weeks. Still, definitely not convinced that this is a reversal and we will see upside. Having some, just the way I'm seeing the market move right now, I'm definitely less bearish than I was just a few days ago, especially off that big collapse on Wednesday morning. But it will be interesting to see what happens here. And if the markets really do make a turn, see their longer term reversals, see their macro reversals, and more upside is to come. Because if so, that's very, very exciting, and I'm excited to get bullish on some growth stocks again. But for now, I'm not convinced yet, and I'm still, my portfolio says this as well. I'm still remaining heavily hedged, and I will act accordingly, seeing how this next week plays out. So, close it out. As any investment advisor will tell you, past performance is no guarantee of future results, but amid the current market hysteria, perspective can provide a little bit of solace. So let me know what you guys think about this article down below. Again, if you want to know how I'm trading going into this week, throughout the entire week, during market hours, once again, first link down below. Do my best to make that worth you guys' hard-earned money, and I'm biased, but I definitely think it is. So check it out if you're interested, and again, join the Discord as well. Great community over here, not just me, but a great group of people that I'm very proud to host in this Discord and create the waves, fam. Okay, so I'll catch you guys downstairs in the comments. Have a great rest of your weekend. Have a great week, and I'll catch you guys next time. Until then, always remember, take action, make waves. Peace.